All right, good afternoon, everyone. Tony Laporta here with TonyLaporta.com. You can find me at www.TonyLaporta.com. I'm doing this webcast so I can talk you through the 4 charts that I've included in the attachments. The first 2 daily charts, which is something that I've been talking to all my clients about for the last month or so, are the 6-day island top formations. They are plain as can be. You could see them blatant as can be. The very blatant one is the NASDAQ. And the thing that I liked about the bearish side of the NASDAQ since January was that it was at new all-time highs. And then we had a 6-day island top. Obviously, we know that the more days in an island, the more powerful the formation is. And we still haven't met we met the first 2 targets. We haven't met the last target. But the reason I'm doing this webcast, the reason I'm putting out this email is I do believe, looking at the gold monthly chart and comparing it to the SPX monthly chart, that we are in for some pain over the next 5 to 7 years. And the reason I say that is, as you know, in my writings, in my preachings, and whatever you want to talk about, what I've learned 39 years in this business is volatility is always found at the highs and lows of moves. And, you know, when I listen to my friend Danny Riley, who talks to the pit bull every day, when I read some real smart money out there who's been talking about the return to inflation similar to the 1970s, and then you see what we've seen since the end of January until, the first week in April, volatility like we've never seen before. These are some really smart people who have been in the industry as long as I, if not longer, and they have never seen volatility like this. And it's been screaming a warning flag at me forever, and now I'm putting it out there that the highs for the move are in. Volatility is always found at the highs and lows of moves. You can see how I expressed myself on that gold chart, the gold monthly chart. Gold broke out in 2002 at $300 a month. By the time 2011 came around, gold was trading in a $300 plus range in August and September 2011. And I called it back then that I felt the highs of the move were in. I remember doing what am I trying to say? Not webcast, but you know, where I sat in like in a demonstration type room, seminar or whatever, online sort of thing. And I take surveys when gold was around $17.50 an ounce. And I take surveys and, like, you know, who's bullish, who's bearish gold? And 90% of the people were bullish. And I'm like, people, volatility is always found at the highs and lows of moves. So I've had a rude awakening this week, looking at time and looking at volatility, and I went back and looked at that gold chart, and the move was a 9-year move in gold. And then you look at the low in the stock market. We all know it was March 2009, and right now it's April 2009. 9 years and 1 month, and we are seeing volatility at the highs of a 9-year move. That to me is stinking bearish huge. I've already, 3 weeks ago, my girlfriend who worked her whole life had her retirement fund was 2.5 times what she invested in it. She cashed in her chips. I told her, I said, cash is a position. And what do we really, if you think about the whole fundamental side of things, you know, we have baby boomers that if they held out through, you know, 2001, you know, the tech bubble, if they held out through 2008, 2009, it's 10 years later. My roommate from college just retired. I literally got off the phone a little while ago with him, and he said, because I was with him 3 weeks ago in Chicago for a concert, and I told him then, you know what, you've been putting money in your whole life. You know, how much do you have? He said, I got $500,000. I'm like, damn. I spoke to him today. He said his people, based on my suggestion, his people put up 70% in cash and 30% in some sort of REITs, real estate investment trust, whatever. And that's where I think the next boom is going to be. I haven't owned a property since I was divorced in 2003. And I'm looking to live in Denver over the next 12 months, and I'm going to buy something there. So I'll be 62 years old then, and why not? I can buy something again. I can afford it. So I've rented since 2003, and I've enjoyed the rental thing, but we'll see what happens moving forward. The point of this webcast is you look at those charts, make the comparisons. All my readers know those island tops. I've been calling that since January, February. Island tops, the most bearish formation. The more days in the island, the more bearish the indicator is. So I just lost a client recently. He says, you know, I'm not trading futures anymore. Stocks are where I like. I said, that's why you have to keep my subscription, because you don't want to own stocks. You want to be short, you know, but you know, the general public doesn't really, they think you just got to be a buyer. Well, believe me, you don't want to be buying them for the next year or so. You know, on Thursday, President Trump came out and said, you know, prices are up, whatever, 30 to 40% since I took office, but we're going to see more pain. He's been preaching well before he got into office, 20 years before he got into office, that the Chinese were screwing us, and they will not screw us anymore. You know, the Chinese are bantering back. Don't mess with us, because we will give back to you what you're giving to us. Mnuchin came out on Friday and said, you know, be prepared for more pain. I mean, we have, you know, the president and the Treasury Secretary telling us that the stock market's going down. Why the hell do you want to have your money in the stock market? Anyhow, a lot of you are in that retirement age. You know, a lot of you are my clients in that retirement age. You know, I talked to like I said, I talked to my roommate today. He's in cash and real estate. One of my clients turned me onto a little bit of reading some smart money, who is looking at real estate and commodities for the next 10 years, a return of inflation similar to 1970 style. How would we possibly see a return to inflation like that? Boy, would trade wars by chance do anything? I think so. They say the markets are 6 to 9 months forward looking. Why did the market come off in January? It came off on the back of rising long-term rates. Now we're seeing mega volatility on the back of possible trade wars. This whole uncertainty in the stock market is not over. But what I know and what I've been taught for 39 years in this business is volatility is always found at the highs and lows of moves. As my readers know, we've creamed it. We've creamed January, February, March. We had a great little April so far. I'm still short. I sold them on Thursday. Market come off big on Friday. It didn't hurt having a $100 billion announcement out of the White House about more tariffs. But when the people on top are telling you there's going to be more pain, you listen to them. You just listen to them. So that's my feeling going forward. I know this is going out to a lot of people as well who used to be my clients. I provided a link in the email. We've got a trade room now going on, and I've got a couple of professionals in there that are damn good traders. And I open up the mic to them often. It's not the kind of trade room that you'll ever be used to. Sometimes we'll go hours and hours without anyone speaking. But the clients can chat amongst themselves. I talk in the mornings, and then I turn on the microphone anytime I feel there's a time and a need to talk. So I still have my workouts every day, and that's important to me. And it's important to you too that you step away from the computer. You can't make money if you sit in front of that computer all day long. That's my own personal opinion. Anyhow, study those charts, make the comparison between the SPX and the gold monthly, and then look at those dailies, the NQ and the ES dailies. Those are island tops. And what I like about the marketplace, I love when the NASDAQ leads. And the NASDAQ put in an island top at new all-time highs. That is a huge, huge warning flag. And I think we're going a lot lower. And I think we don't bottom out for another 4 to 5 years. So, but the first we've had a good leg lower from the high. The next leg lower will be even more dynamic, and then we'd probably do a churn and burn for a year or two. But this next leg I'm looking for into the end of April. If you want to make some money, you can ask. I don't know how many clients I have left that I had in 2008. We creamed it in 2008. I started finding gaps that were 100 handles away in the S&Ps, and I'd say, this is our next target, and we'd go down there and fill that gap. We'd go 10 handles underneath it, and the Fed would cut rates or something, and boom, it would rally 70 handles. I'd say, okay, we got a 2-day 70 handle rally, time to sell them again. We made so much money playing the bear side. The bear market is the greatest trade out there. And we haven't had one for 10 years in the stock market. And guess what? All these millennial analysts, so-called, they don't even know what a bear market is, half of them. They don't know how to trade a bear market. So I'm on it. I'm ready to play. Use that link and sign up. It's $125 a month. It's the best money you'll ever spend. This is Tony Laporta with TonyLaporta.com signing off. Cheers.